want to continue to speak on not only what the market is reacting to when it comes to the stock market as well, but also oil prices. I want to bring in our next guest to help break it all down. Dan Varroney, economic strategist, joining us here on Live Now from Fox. And Dan, what a roller coaster this week has happened, and it's only Tuesday, Dan.
It is only a Tuesday. Can you imagine this, Mike? Sunday night, it looks like the prices per barrel were going to go to $150, and we were going to have $4 or $4.50 gasoline. And lo and behold, there was a turnaround yesterday in prices, which was absolutely exciting. In that we saw the price per barrel fall beneath $100. It came further beneath $100 today, got to around $84, $85. Market finished strong yesterday and was only down 34 points today.
Yeah, I mean, truly a rebound, what we are seeing. So, Dan, is the market pretty much now pricing in the war to be over soon?
You know, I think that's a great question. I think what the market is saying, you know, when you look at it and with all sincerity, I think the market and the oil analysts are saying it looks like the U.S. the U.S. and Israel have done very well in their efforts, and we could be looking at an end to this conflict in the next 3 to 5 weeks. But I think what they're also factoring in is the Straits of Hormuz. Can that remain open? Can they get it open? Can it remain open? Because remember, 20% of the oil supply come through the Strait of Hormuz. And right now you've got oil analysts that are still on edge about that. And if they see that that can happen, that oil can flow freely and safely, I think you'll see prices come down precipitously.
It seems like with the Strait in connection to really the economic powerhouse there in the region, that it seems like Iran would want to really target this if they can. Do they even have the capability of really throwing a wrench into the system here?
Well, they've got drone technology right now, and I think what the president, the secretary of defense, and CENTCOM are focused on right now is how can they further deteriorate their military capabilities to take out any ships going through the Straits of Hormuz. That might take a few weeks, but I think the president and his team are looking at all options.
And for the market right now, I mean, we saw yesterday just what could happen when there's some positive headlines coming from a conversation that a reporter had with President Trump saying, hey, this war could be wrapped up quicker than the 4 to 5 weeks that was estimated. We saw that spike happen today, and we saw a nice go-ahead after some sell-off earlier today. Why did we see, again, today in the afternoon, that pullback?
So certainty, right? Certainty. It's all about certainty. And one of the things that I've said from the beginning of this conflict is it's all about certainty. And right now we have uncertainty. So the people sitting at the oil desks right now are saying, how much certainty do we have? So when you see pullbacks, they're saying, maybe we're not sure. Maybe we're not sure. But I think on the other hand, there's far more certainty today. And what I mean by that is the air superiority that the U.S. and Israel appear to have today. And we are far ahead of our benchmarks in terms of where the conflict started. And I think if we stay there and the Straits of Hormuz open, I am confident that oil prices will fall precipitously.
And Dan, I want to ask you this because on Saturday evening was our first really glimpse at seeing some of the big war being raged on when we saw those oil fields in Iran, and you had the big fireballs in the sky, and that was leading to a lot of the talk of the futures really climbing on oil. It seems, though, from this war, we haven't gotten a lot of images coming from the Middle East just because we don't have the boots on the ground like we did back in 2003 in Iraq. If we did have boots on the ground and we saw more images of this war, would that cause more concern, do you think, for the market?
I think the markets would be absolutely more concerned if that were the case. What I can tell you now is that the bomb damage assessments that we're seeing through the Secretary of Defense and the Chair of the Joint Chiefs of Staff are incredibly positive. And I think that's what is causing more confidence right now. But I think if we saw more information, I think there would be a lot more shakiness and uncertainty. And Mike, the other thing that I would tell you is that when you look at things where they are in terms of our economy today, before the conflict started, the economy was on stable footing. Inflation had fallen to 2.4%. We had seen a strong jobs number in January. There are 170,000 new private sector jobs created, and now there's more uncertainty. Tomorrow we'll see the consumer price index numbers, and I'm going to encourage all of us to look at the energy costs and the core prices and what the shelter prices look like. And if they look good, we should all be feeling very, very good about the economy and where it's headed as soon as this conflict ends.
Yeah, absolutely. I just have a feeling that the market is waiting for that Truth Social post from President Trump to be put out saying either there's a ceasefire or the operation is over, and then we'll see everything just shoot.
I think that's absolutely right. I mean, I feel confident that in fact will be the case. If you look at where we thought we might be, honestly, in my case, I thought we might be a few more weeks behind, but I think we're further ahead. I think based on the president's press conference late yesterday, he was confident. The Secretary of Defense, Chair of the Joint Chiefs, early this morning was very confident. And I think that the end is closer, but I think it's probably more like 3 to 5 weeks and we'll be there.
There we go. Dan Varroney, always great having you on. Thanks so much for the insight and analysis. We appreciate it.
Thank you.